Hello, I'm Donald McIntyre, founder of Etherplan. This is Etherplan Live, and joining us are Bruce Fenton and Tron Black of Ravencoin. Hello, Bruce. Hello, Tron. How are you?
Hello, doing well.
Hey, thanks for having us.
Thank you very much for your time, and we're going to talk about Ravencoin today. My first question is, if you can tell me what is Ravencoin, like short, the short story.
Sure. The very short version is it's a clone of Bitcoin that's going to be used as a platform for assets.
And I saw on the white paper that you're going to add assets, changes to op return, add messaging, and also pay dividends. Let's start with the assets. How are those going to work? Are they going to be like smart contracts similar to Ethereum, or is it another kind of way of solving that?
Sure, it's a different way of solving it. Ravencoin, you could add RSK to it if you wanted to, but that's not how we're adding assets. We're going to add assets similar to the way, let's say, Omni or Counterparty of one of those layer 2 solutions. Only we're going to integrate it in, which makes it a more integrated solution, a little easier to use.
So it's in my mind, Ethereum smart contracts like an ERC20 is like an app on top of the protocol. In this case, the assets are going to be part of the protocol.
Yeah, so the assets will be built into the protocol. It will act like an ERC20, except it will have some differences. It won't have the contract ID. The asset names will be unique, which is some of the things that you can't do with smart contracts.
Okay. Are the smart contract going to have capabilities like all types of corporate actions?
No. It's that's possible with some of the other technologies. But this one will not be like a reversible stop it from trading, that kind of thing. This is a token that is just a tradable token.
And by corporate actions, I mean, for example, dividends or stock splits.
Okay, yeah, probably not stock splits. Dividends would be one of the ones that we will be able to do. Those will be distributed. The value will be distributed via Raven. And it's not a dividend that, like, you own something you get paid. It's not like a master node or something like that. This is something where if you had the token and then you wanted to reward the token holders for whatever activities they do, then you'd be able to get Raven and distribute to those same people.
Bruce, I think we have some interference from your side. I don't know if you can mute your microphone.
Okay.
And then when you talk, you unmute it. I saw on the white paper that something interesting, that when someone creates a token and gets a name, no, for example, art.
Yes.
And then that is like a layer of token, but somebody could do like art and then a subdomain for a specific piece, for example, Mona Lisa. How is that going to work? Tron, are you there?
Tron might have frozen, I think.
Yeah,
basically, so the protocol will, hopefully he'll come back in a second, but the protocol will allow creation of unique assets and limited assets, and also fungible assets. So you could create 1 million shares of XYZ Corp. You could create 10,000 tokens of game gold, or you could create 100 platinum swords in a game, or you could create 1 platinum sword in a game. So what this does is allows you to do a lot of different interesting things with share classes. So you could have 1 million shares of Class A shares and 200,000 shares of Class B shares, and those could have different rights and different powers and receive different dividends or have different messaging. Same with that would be for a public equities type usage. You could also use it in a game. So people in a game could have a certain game item that allows them to get quests or something like that, and they would receive communications on that.
Very good. So there's going to be a layer which is the general class of a token, and then you can create subclasses, and those subclasses can be used for different corporate actions or subdivisions of types of owners, or you can attach specific assets which are off-blockchain assets, etc.
And I think a different way to think of it is that the owner of the original asset, let's say art, could create sub-assets, again, at the top layer, but they're the only one that could create that sub-asset. We have examples of this, like a game company could have sub-tokens for each of their games, but then under that, they could also have individual unique assets that they send, that are actually game items.
Okay, and all this is related to messaging. So how would the messaging functionality work?
So the messaging functionality is a one-way. It's you can think of it as one of the problems that you have with existing systems out there. By existing systems, I mean the stock market.
Mm-hmm.
So if you try to collect all of the information, you want to send out, let's say, a notice to vote, a proxy vote. You need to go to a company that then collects from all the different various parties, costs you a bunch of money just to collect their mailing address.
Mm-hmm.
And then you got to pay a bunch of money to mail out information to them with a proxy form, et cetera. This would allow you to communicate in that kind of one-way fashion of like, I want to communicate with all my token holders. I want to say, here's a vote, or what should we do, or things like that, or whatever kind of messaging you want to send. But it's kind of a one-way broadcast. Okay. Only the token holder can broadcast.
Okay.
So it's not a spam channel. It's a one-way.
So when I create a token, the Donald token, for example, and I'm going to have different classes of shares or different types of assets, I can have those two layers, and I can send messages to all the owners of those tokens.
Correct.
And then every now and then, whenever it's applicable, I can pay dividends. How does the dividend function work? Is it similar to?
So you would just let's say again, I'm going to ignore the regulations for a minute because in some jurisdictions this isn't allowed, in other jurisdictions it is. But basically, you would take the value, turn it into Raven. Raven will have some value. And then you would broadcast that Raven, and the software will take care of the details. So you want to send it to Donald token holders. You basically say, just send this to Donald token holders. There'll be an exceptions list that you can say, well, I own some of these Donald tokens that I haven't distributed yet, and I don't want to send those to myself. So you can put those in the exception list, and then all the other Donald token holders will get a pro rata share. You won't necessarily know who those Donald tokens are owned by or what addresses they are. Kind of doesn't matter. You just distribute the Raven pro rata across the field.
My last question about the structure of the assets and the functionality, Bruce. Yeah. Maybe this is for you. This corporate action thing. Corporate actions have many colors. Sometimes it's just pay a dividend. Sometimes it's to do a stock split. Sometimes it's to pay a dividend in stock. Sometimes it's to just withdraw the whole issuance and change it for a new issue. It can take many colors. Do you think that this functionality is going to enable that?
Well, there's quite a bit of what we can do already, and I think we could probably, there's probably, ideally, some of those things can be added on a second layer, so it doesn't need to be something that is messed with in the code. If you look at what Bitcoin can do, for example, there's quite a bit that it can do, and the tokens that run on top of this platform will be able to do that. One interesting point that's worth mentioning, since you were talking about what Tron just mentioned about the how you have to go to get a list if you're a publicly traded company, for example. That's a really key point, because a lot of people don't understand this. A lot of people that are Bitcoin maximalists like me, or people who've been in crypto a while, they say, well, you don't need this because you're already relying on a trusted third party. And that's correct. But what they don't understand is that in the way that capital markets work right now, it's you don't just rely on the issuer. You're not just trusting Apple to not steal your shares. Nobody's really worried about Apple stealing your shares. The current way that it works, there's a whole bunch of intermediaries. Because a lot of techies come from startups, they assume that you have a cap table. They assume that Apple has some list somewhere of shareholders because their little startup has it. But that's not the way that it works in the real world. Apple doesn't have a list of their shareholders. Overstock or IBM or Microsoft, they don't have these lists. They have to rely on third parties. They could never manage a database. So a lot of people make an erroneous assumption of assuming that, okay, this is only replacing an internal database, and it's already an internal database, so a blockchain would be redundant. We're not solving for that. We're solving for these trusted third-party intermediaries like DTCC and CD & Co. and clearing firms and transfer agents, and this whole huge complex process where you have this broken, antiquated, distributed network that does that custodies the ledger. And what we would, a project like this would allow, or Bitcoin or any other good blockchain would allow that ledger to be put on on a blockchain. So that's an important distinction that a lot of people
it definitely cuts all the layers that the traditional system has. No, today Apple has their own registrar, and there's one ledger there where they only see CD as their owner, and then CD turns around, and there's a second ledger which is DTCC, and they keep a ledger of all the banks and brokers that owns the share of Apple. And then all the banks and brokers, they have their own ledger where they know which are the retail clients or the final clients. So there's 3 ledgers, and it's very complicated. And
the only reason you know that is because you were a stockbroker, just like I was. If you weren't a stockbroker, there's no way you would know that. So there's a lot of people who don't understand how this actually works. Other than people who've been in the industry.
So the idea is that when I have, for example, a share of a corporation on Raven, I am going to receive a message directly from the issuer. Correct. Saving time and cost and price and money. Yep. So that brings me to the question: who are the target users? It seems obvious that corporations, no, but in general, who are the users that you see issuing assets on Ravencoin?
We have lots of use cases that we've written down. I think that's going to be up to the users to decide what use cases fit best. So, I mean, I can name a bunch. I think it's a protocol.
Certainly securities issues would be high on the list.
Corporations for securities, for example, it could be bonds or it could be equity.
Sure.
Issuers in general, and I heard on your tweet storm, Bruce, you mentioned gamers. Do you see a particular use case for gamers?
Yeah, it seems cool. I think that particularly with the unique items, as soon as, and it was Tron's idea to come up with the unique items, which is kind of like an ERC 721 sort of token, and I don't know if there's many applications for unique tokens for securities. There's certainly limited numbers, so you could have 20 people that are founders and 500 that are class A, whatever, seed investors, and then you could have the rest. So you could tier it out, which is very useful. So you could actually invent new ways of doing equity that are much more seamless. I don't know of things unless you have like a super share where the founder of a public company gets a share or something like that. But for gaming, I think it's really natural. And I always thought gaming, I know it's a cutthroat and hard business. I've never had any experience in gaming, unlike securities, but it seems like it's fun. So, personally, I think it'd be great if some gaming people who have expertise in that can find some use with this chain.
As an entrepreneur, one thing that occurred to me is to use Ravencoin to start a company. For example, I want to start X company with Tron and Bruce, and usually we would go to Delaware and get a corporation there. Do you see like replacing that Delaware corporation here on Ravencoin and doing like a startup company?
I love that idea. There's some rules in the US that kind of prevent some of that, but jurisdictionally it works everywhere. You could create tokens that represent part of a project, and then reward the early investors, through the system. So I think the protocol will allow for it.
We could use the protocol for the hard stuff, and then some contracts on top between us to recreate the other parts that are needed for the corporation, maybe.
And one actually use that you can have for a unique token is you could have a CUSIP number or some similar number. Maybe we invent the world invents something new that replaces CUSIPs. But you could actually, you could issue 1 million tokens, and each one of them could be unique. That would be a lot of work. But you could issue a bunch of unique tokens and have actual specific tokens tied to a legal document where a company says, yes, this token means that you own this, or this number of many of tokens means you own that. And again, people say, oh, you're trusting a third party, but you're already trusting them. If you think the company that you have equity with is going to steal your, for one thing, that's not a very common problem. Very, very rarely do you hear, Apple or somebody stealing their certificate, saying, oh, we're not going to honor your certificate. It does happen, and there are weird things. There's a case with Dole Foods where Dole, there was 46 million claims on, I think, 39 million shares. So there's brokers that will lie and say you have shares when you don't really have them. Those problems are exist, but they're not super huge. But the moving it around thing would be pretty pretty good killer app. And maybe you tag. It might be too much work to do it, but maybe you tag individual assets and say that this matches this, or this share class matches these CUSIP numbers, and then all you need is a document from a corporation that says, yes, this is really a share. And again, if you're already trusting the corporation, big deal. You already have that document when you have a share. So the only real argument would be if somebody says, no, shares are never going to be worth anything. Corporations are going to cease to exist. Nobody's going to own equity in anything. The disconnect of saying, well, here's a token and here's a share, that there isn't a ton of legal problems with that. There's legal problems all surrounding it with, whether you're a broker or not, selling securities with out of license, all of these kind of things. But there's no rules that say, and we've looked at this with counsel for a lot, there's nothing that says that you can't represent your share in a digital form that is a token.
We do solve the Dole problem. If you're not familiar with it, look up the Dole shareholder thing where there were more shares than issued. We do solve that, right? I mean, it's all
Dole, yeah.
Ledger, yeah.
But no, the Dole problem was that there's the ability to short shares, so that creates shares through the lending process, and that's an off-blockchain issue. Here at the protocol layer, you just have the stock of tokens, say 1 million shares, and it's never going to change, and that is protected with the security of a blockchain. Whether off blockchain, there are markets and people are lending those shares and creating more shares through contracting. That's a different issue, I think. The other thing that you said, Tron, is that this is a protocol and it crosses all boundaries, etc. So it seems you're concerned with the functionality of the protocol. But one question that I had is, for example, in the case when Bruce mentioned that you connect a work of art which is off blockchain, or when you connect the shares of Apple, which the relationship with Apple is off the blockchain, and I depend on Apple to send the money to the blockchain and pay me the dividends.
Right.
Is there something thought out for that? How to trust minimize the external part?
Token.
Excuse me?
There's nothing specific that can link the real world to the tokens.
Okay.
The tokens will operate like an ERC20 token, but there's nothing in the protocol that's going to link that token to the real world. Just don't have that.
Or they'll operate like a physical share. If a share, you could have a share that, as you know, Don, from being a stockbroker, you have people that still have paper shares from IBM that are 50 years old, 30 years old. Those shares are still honored. If you have a bearer instrument, or even if you have a digital share, a more modern share, those are honored by the company. And that just becomes an issue of, is the company honoring what they say? Are they paying dividends when they say? And then you could go in there and have just as hard. A court case isn't going to say, well, wait a minute, Apple said this paper certificate counts as a share, and they also said this digital thing called a token counts as a share, unless a court said, oh, we're not going to acknowledge the second piece. But you could have it all through legal documents and everything, where Apple says, yes, these are real shares. Just like they say certificates. If you go in with a fake certificate, they won't honor it. But if you go in with a real certificate, they will.
When
there will be some metadata that you can connect to these. So someone could connect a document, signed document, to the token. So there'll be some metadata that you can associate with the tokens. That will be off-chain, but it will be hashed so that you know that the document hasn't been changed.
Very good. Okay, let's go to the history of Ravencoin. When did you think about it, and when was it launched, and what is the current situation?
Well, I'll let Bruce answer that one.
So it was it's an ongoing and evolving idea. The binaries were launched on January 3rd. There was an announcement on Medium on October 31st, and
2017.
2017 Medium article on sort of and it was kind of the announcement date of Bitcoin, and then we launched the if you noticed in the white paper, we put a little paragraph in there kind of thanking the Bitcoin developers, so it was a little homage to Bitcoin. And also there's two reasons. One, Bitcoin worked, so whatever timing there was, maybe there's some maybe that's a good practice. you can't really say it's too long or too short if it's the same one Bitcoin did. So we did the original sort of very basic Medium article on October 31st, and then the binaries were January 3rd. And they were announced in between. There was plenty of, we tried to announce it to about 100,000 people through social media. We spoke at a few different events and things like that, did some meetups. So we definitely wanted to make it a fair launch so that plenty of people would have a chance to mine it when it started. And that seemed to work. The network grew pretty fast. Tron can talk a little bit about how the network has grown.
So it's been working physically, the network, since January 3rd. People started to download the node.
Yeah, one of the things we did was you could CPU mine on day one. It was a different algorithm, so there was no GPU miners out for it. So that lasted maybe 2-3 weeks, and then they created GPU miners. Anyway, the networks grew a lot faster than we expected. The mining's really taken off.
So people can use it using CPUs and GPUs?
You could mine with CPU. That's not really practical at this point. It was practical probably for about 2-3 weeks. Now GPUs are really the only practical. I mean, you can mine it with anything. You can mine it with a pencil and paper if you want to, but it's really slow. CPUs are better, but still probably not paying for your electricity, and GPUs are the best solution at the moment.
What is the size today of how many miners and economic
I don't know
nodes?
how many miners. We have about a couple terahashes per second of mining. And each one of those terahashes is actually 16 hashes that average about 4 times more work than a Bitcoin hash. So you have to kind of do the math to figure out how much work that is. We're still a small fraction of Bitcoin's network hashing power, but it's growing pretty quick and it's pretty strong.
Are there minor nodes only and economic nodes only also, or is it like Bitcoin in the beginning?
The same thing. You can open your router and help the network by opening your router and getting more connections, and then it'll basically route the connections to other people. So that's helpful. But for the most part, it's people mining that really brings the strength.
Do you know how many transactions per day the network is processing?
I don't have a count on that.
We've done, let's see, 822,000 transactions so far, it looks like. And as far as number of miners and nodes, I think it's something like 7,000 nodes. Looked like it's really hard, it is with mining when you get into pools and everything. But certainly, I think we could conservatively say over 20,000.
Okay.
Likely people, maybe people have multiple computers, but even accounting for that, it seems like there's 20,000 plus connections or so.
And Tron, you are the lead developer, but how many developers are the extended team?
Yeah, here we have about 6 people. We have another one starting on April 16th, and then we have community developers. So we have people that are working on an Android wallet and helping out with an iOS wallet. So some community and a lot of development here.
When you say here, you mean there at your team?
This is we're getting help from Medici, kind of funding the developers and kind of paying them to work on this project. So, but we're also soliciting community developers, all the help we can get. We have kind of a roadmap. I think we'll get more community developers. I think once we kind of solidify kind of the first round, which is a little bit technical, requires a lot of people working closely together. But at some point, we'll want more community development.
So you're hosted at Medici, which is in Salt Lake City. It's a VC firm. And it's helping the project.
Correct.
Very good. What is the functionality that is available today on Ravencoin? Is it like pretty much Bitcoin today and
pretty much Bitcoin, a little bit faster 1-minute blocks, and a faster issuance rate, so 5,000 instead of 50. So ultimately, 140 years from now, there will be 1,000 times more coins than there will ever be for Bitcoin. So 21 billion with a B instead of 21 million with an M. Ultimately, but it's still issuing right now. So,
but in terms of functionality, are the issuance of tokens, messaging, dividends, the up return changes?
We're in the process of building that. We'll do hard fork, or otherwise known as an upgrade. When that functionality is ready, that will be released as a hard fork.
Okay, so for now, it's a fork of Bitcoin, very similar with a few differences.
Yep.
But the functionality for tokens, dividends, and all the things that we spoke is going to be added in the future. Correct. With a hard fork.
Yes.
The general structure, I guess it's a VM, the blockchain, the currency, the consensus mechanism, programming language.
There's no VM. So that's kind of an Ethereum concept where you have to be able to run code and have protect the rest of your computer from it. So there will not be a VM with this. It's a UTXO model, which is like Bitcoin. So transaction is inputs and outputs. Creating the transaction will do a similar kind of thing. A lot of the technology that goes into creating assets has already been written multiple times. Started by J.R. Willett, who we're in contact with. It's Omnicoin or Omni counterparty. They all use a similar model, so it's really a protocol that rides inside Bitcoin. We're going to put those two together, and as we put them together, we actually make it a little more seamless. There's some clunkiness when you have a second-tier protocol on top of Bitcoin. There's a little bit of clunkiness you have to worry about. You can actually lose the assets by sending the Bitcoin without the asset, things like that. So we'll be able to solve those because it'll be in the same code base.
At the block level, then just to clarify, instead of 10 minutes, it's 1 minute.
Correct.
And then for now, I read that it's 1 megabyte, like Bitcoin.
That's correct.
But you're planning to increase that to X megabyte. What is that?
Correct. Well, I'm not exactly sure, but what number we're going to actually use and increase it to. But we are in contact with BlockSroute, which has a system that allows blocks to propagate faster. And they're working with a number of different cryptocurrencies at the moment. And so we may be able to speed it up more than most people think you're able to do with the current systems.
Very good. So the currency is called RVN, and instead of 21 million, it's going to be 21 billion. Right. And therefore, the block reward, instead of 50, like was Bitcoin originally, is going to be 5,000 per block.
Yep.
And the issuance schedule is in proportion, but the same. Exactly the same.
Yeah, so the timing of the block halving is identical to Bitcoin. So we actually had to increase the number of blocks before it halves, but so that we can get that same four-year halving.
Yeah, if it was 10-minute blocks, then it would be exactly the same as Bitcoin with 3 zeros added on. So it's so basically just picture 10-minute blocks with adding 3 zeros, so 21 billion instead of million. Only we adjusted everything to divide it by 10 because it's 1 minute blocks.
The current consensus mechanism is a proof of work inherited from Bitcoin, but I read that you were planning to change that.
We have already changed it. So the proof of work mechanism that's been swapped out was in the initial release. It's called X16R, and what it does is it's somewhat innovative. I mean, there's already a couple of coins that have kind of copied what we're doing. So one of the things that Bitcoin just is a kind of a double SHA 256. Then there was some other innovations from Dash that did 11 algorithms chained together. Some other people made it 13, 15, 17. We took 16 of those algorithms, but instead of going in a fixed order, which is what Dash and all of the other ones do, we actually changed the order based on the last bytes of the previous block, which means they're reordered every time.
Randomly.
So that's the innovation. Gives us a little bit more ASIC resistance, not ASIC proof. But we've also have a commitment to swapping the algorithm, doing some changes. Someone builds an ASIC for it. That's because we want a good distribution. ASICs tend to concentrate in data centers, and those can be, I guess, stopped if necessary. Prefer to keep this more the people's coin, right? So it's being mined by gamers and machines that are just out there all over the world.
Okay, so that's part of the philosophy that I'm going to ask later. So, so the 16R, it's already working.
Yes.
And it's a protocol to prevent ASICs, and it rotates like quasi or semi-randomly between protocol to protocol, so it prevents a company like Bitmain to build something.
It is random each block, but it is deterministic each block because everybody has to do it exactly the same way. So they have to look at the hash from the previous block to determine the order.
Yeah, so everybody, there's not only consensus of the hash of the block, but also consensus of what proof of work used for the next block.
Correct. Yep. Yep.
In terms of structure, the last question is, so who are the types of participants. I think that what we spoke before is that there's only one kind of node, and you can be a miner or economic node, but there's one kind of node for now.
Yeah, I mean, you can run the node without mining, and like I said, it can help propagate transactions. But there's really just you just run the software and it works. And so that's just one kind of node. So there's no master nodes. And the type of people, it's all over the place. We have a fantastic community. I mean, it's one of the best parts of this coin is the community and the support that it's getting. So.
Yeah, the reason for my question is because Bitcoin started in 2009, also one kind of node. Everybody was miner and node and everything at the same time.
Yep.
Today, we clearly have a division of power between users or economic nodes and miners, even if they are ASICs.
Right.
In the case of Ethereum, there's also that division of power, and with Casper, they're going to add another Casper-friendly finality gadget. They're going to add a validator, which is a third kind of participant. Right. In your case, for now, it's a not small, but early stage network. So for now, the node is only one. Maybe in the future, there's going to be a separation between miners or specialized miners and nodes. Do you plan to have some hybrid, like add validators in the future or something like that?
Not currently on the roadmap.
So it's pure proof of work.
It's pure proof of work.
Okay, regarding policies, now philosophy.
Okay.
The first philosophy is bootstrapping. Can you or Bruce maybe talk about the bootstrap and the community spirit and stuff like that?
Sure. Yeah, we tried to make this as fair and open source as we could, and really just let the community do it. And it's interesting because a lot of the infrastructure that has been built around tokens isn't really suited for that, and a lot of the new people, and including the cryptocurrency Reddit subreddit has 600,000 people. When I started, there was no such thing. The Bitcoin one had like 30,000. So the ecosystem has grown, and a lot of new people, hundreds of thousands of new people, have never even actually seen a real open source project that's proof of work. So a lot of the systems that are built around this are suited for centralized tokens, corporate coins. We get a lot of people asking, do you want to do a joint venture? Do you want to sign a press release? Do you want to support this? And the answer is there's no we. We're just individuals. One line we've kind of joked as, we'll sign whatever paperwork Bitcoin signed. Bitcoin can't sign a paper, and neither can Ravencoin. It truly is an open source type of thing that we're trying. There has to be somebody who has a Twitter or is on a GitHub, or Tron is a centralized person where he's going to accept commits. But as far as we can, we're trying to make it as decentralized as possible. So we try to be very fair with the mining. And that changes a lot of things. It's very interesting because it really does. It's not just, it sounds like some kind of new agey marketing thing almost to say, it's the people's coin or it belongs to other people. But we've tried to make it that way where there was no developer set aside or founder shares or pre-mine or anything like that. We try and make it so it really is out there where people can do what they want with it. So that sort of those policies I think are sort of a best practice, hopefully.
So it's an organic growth, started with one person, then another person, and now there's thousands of people, and that's perfectly okay. And I think that to have a lead developer is perfectly okay. As long as there are different participants in the network, it still keeps the and permissionlessness. And part of your philosophy was not to do a pre-mine and no ICO.
We were very lucky that because we're the next generation of crypto people. So Tron's been in crypto a long time. I've been in crypto a long time. We were able to put some time in ourselves where we didn't have to worry as much about saying, here's a big financial risk. We've already been in crypto, so we were able to put a lot of money and a lot of effort into it. And then make even more fortunate, we had a super generous benefactor in the form of Medici, Overstock, Patrick Byrne. They just really like this project. It fits with their model and what they're doing. So So that changed the economics. I don't think Ethereum could have done that, because I remember that first 18 million was a lot of money back then, and I don't think they would have been able to pay for an office or pay for anybody to do anything. So the economics changed a little bit because of the way that the world has evolved. And also, frankly, it's a lot of people wouldn't want to do a model like this because you don't get rich off of it. You can get rich potentially, maybe if by some lucky thing this coin does really well. And there's a whole bunch of other things that would have to happen for it to have value. It has to work. Not only does it have to work, it has to make sure nobody else does a better job at executing everything. But even if all the stars align and the coin does great, you're not going to make any money on it by being involved in starting it unless you take economic risk. So even if you were there day one, you didn't get anything unless you spent a lot of money mining to accumulate a bunch of coins, and so it does spread it out a lot better, which I think it's not something a lot of projects are going to want to pursue. But for this type of product that we want to make a real global standard, we want to get the big corporations and the individuals and the real cypherpunks and also on the other end of the spectrum, the large corporations. They don't really want to work on a project that's designed to make, if Tron had a 30% set aside, they're not stupid. The big corporations are going to say, okay, well, you build your thing. We're not going to support that project to make some single person rich or have something that's captively controlled by a corporate audience. So the philosophy, it wasn't just trying to be, hey, cypherpunk, go. It was a business decision that if we want this thing to work, we want solutions that work for us and others. We want to build a real network, and a way to do that is to do it same way Bitcoin did it, same way that successful project worked. You just let it be open.
So Tron, Bruce, Patrick Byrne, Medici, and Overstock, they are just helping the project because they believe in the project. They don't have any special allocation of tokens since the beginning. If anybody wants token, they just install a node and mine. But aside from that, we're
mine it or buy it. Yep.
Or they can buy it in the market, etc. I forgot to disclose that I bought 4,000 Raven yesterday. It's like $160 at the time. So I'm also a holder of Raven. So it's like me or
people
like anybody.
People are going to accuse you of using this show because they're going to think you're going to try and pump your $150 to $160.
Yeah. I'm a bad actor. So let's talk about the philosophy of security. I think it was very, very clear when we spoke on Twitter, and also when I read on the white paper, that security is a high priority for Raven, similar to Bitcoin. So there's several tensions there. Security is one thing, and sometimes hard forking, like you're planning to do, and smaller block times and larger blocks can go against security, at least in the minds of many people. Can you tell me about that tension, if there is any tension, or how you rationalize that?
Yeah, I mean, we're basically a fork of Bitcoin, so the security should inherit, those same security models. The tension with block propagation times, higher speed blocks, things like that, are really related to centralization or block propagation times. And so we're kind of solving both of those. Block propagation times, we have connections with some people that are building technology to do faster block propagation times that would push beyond what most people think or have calculated if we need to. Right now, there's really only kind of two coins that have scaling issues. I mean, everybody might have scaling issues, but right now it's pretty much Bitcoin and Ethereum have scaling issues because they're popular and they're starting to hit those limits. Most of the other coins don't have that issue, but we're already working to kind of solve those kind of in advance. So if you want to look at something like Block's route, you can look at that technology. We're talking to them. So that allows you to increase the block sizing, increase the block speed, because it's how fast you can get the block to the other nodes. Everybody's mining on the same blocks. You don't have forks and you don't have orphans. So that's part of it. That's kind of one of the things that Bitcoin was worried about with increasing the block size, was block propagation times.
Yes.
They also have some issues with ACE.
He
Did it cut out?
Potentially could have, has to run in a data center and then we have propagation, or we have centralization issues. So we've kind of we've already solved that. We're not going to have ASICs. We're going to have GPUs. People who are basically just mining around the world. So we've kind of solved the two problems. That allows us to push it, not to infinity, but certainly larger than what people have been talking about recently.
So the central what you're saying is that the central problem of a distributed network like Ravencoin with 20,000 nodes all over the world is propagation time.
How fast you can get this last solved block to everybody, so everybody's working on the same solved block, so everybody has consensus.
Exactly.
Then everybody would be working on the same thing. You wouldn't have to worry about waiting 6 blocks.
Yeah, Bitcoin is conservative, so they decide to keep the block at 1 megabyte, even though with SegWit it's much more efficient than before, it's scaled better, and to keep the 10 minutes. Here you lowered it to 1 minute, and you're going to increase to more than 1 megabyte because you have solved the propagation issue.
We have it can expand more than it has, more than 1 megabyte. I don't think that's a problem. But we also have some solutions that basically can sit on top and propagate faster. Yeah. So
are those solutions network solutions like ISPs helping you?
They are network solutions. And if you read the blocks route paper, it does some things where it propagates the transactions kind of in advance, and then it propagates basically sends 100 times less data, because it can basically say the block is constructed with these transactions, and you can put that together. So it's a bolt-on solution. You don't really need to use it until you have scaling issues, which is a problem to have it. You have lots of transactions, lots of users.
For engineers, which is the white paper, the paper that explains that?
That's actually Bloxroute, Bloxroute.
ROUTE, and that's on the website, the Ravencoin.org website.
On the Ravencoin website. It's not something that Ravencoin needs currently, and if we need it for scaling, that technology is there.
Okay. So what you're saying is that you can marry high security and a priority of security, even though if you're lowering the block time and increases the block size because of these efficiencies in routing.
Right. There's a tension between the scalability and security, and we think there's some technologies that will help solve that if we need them.
If Ravencoin already has 1 minute blocks, and you're going to add more than 1 megabyte blocks, that means that the block route system is going to be integrated to Ravencoin at some point, no?
It may, yeah, if we get to that scale level, yeah.
It depends on a lot of things. It depends on how other scaling solutions, Lightning, and there's so much work being done on this that by the time this is a problem, hopefully the Lightning Network will have solved it, and a lot of other things will have solved it, and we can use some of those solutions as well.
We can piggyback on top of all of those solutions, because we're basically a fork of Bitcoin. So all the SegWit stuff, all of the Lightning, those are also solutions that will be built in.
Okay, bueno, this tension or this dichotomy between security and block size and propagation and all the issues that we spoke, I think is very important. And maybe engineers and people who understand the technology specifically should explore it further. But I don't think it's a minor issue to say, oh no, this is solved. It's going to be okay.
Well, remember that we're only at 1 megabyte blocks now. Yeah. So that's one reason we didn't do we didn't have a block increase when it first came out.
When the time comes, the explanation has to be there also.
Sure. Yeah. I mean, I think if we were to say, okay, 4 megabyte block size, starting with a fork in a month, that would be a massive problem. We may never increase the block size. It really depends on what happens, but certainly security is going to be the first thing. And we've been watching all of those conversations like everybody has for the last couple of years. It's definitely it'd be the whole purpose of why we copied Bitcoin is because we wanted the most secure basic chain.
Yeah.
So it'd be crazy to go and when you have all these experts, some of the brightest minds in Bitcoin that are very acutely aware of this issue, you wouldn't want to ignore that. And so it's more like a theoretical thing when an if scaling becomes an issue, then we'll have
Yes.
some ways to look at it.
Also, the philosophy of adding stuff by forking, it can be controversial. In Ethereum, clearly it's not a problem, and maybe it's justified because of the level of complexity of that network. And in Bitcoin, it is a problem, and maybe it's also justified because of the lower level of complexity. It's just a ledger with accounts and balances. So why risk it?
Well, I mean, the biggest danger is that people don't follow you, right? And so you there's been multiple forks of different coins. Monero's kind of going through this now. They said, we're going to stay ASIC resistant. Another group said, we're not going to follow you, and so there'll likely be a few forks of Monero. So that's one of the bigger dangers, is that you kind of end up getting two coins.
Yeah, the hard fork evidently adds new features, or you can fix stuff from the past, a bug or something like that.
As long as everybody follows you, it's a non-contentious hard fork. It's it's an upgrade. I mean, as long as everybody follows, the miners and the follow, it's just an upgrade. It's not a problem.
Yeah. What the hard forks have something about the future, which is to change the rules for the better for the future. And a hard fork doesn't include the people of the past. A soft fork includes the future and the past. So I think that's the main difference. That as a risk, it could mean that it gives, because soft and hard forks are subjective decisions between humans. It could increase the risk of introducing human decisions into the blockchain, like censorship or account freezing or blocking an account from the past or stuff like that. So that's why I think Bitcoin has that strong ethos of definitely no hard forks, to minimize the subjective part. In this case,
but the code's available for everybody to see. I mean, if the code has something that says we're going to block something, then the community doesn't follow along. The miners don't follow along. I mean, that's the only thing that you really need to worry about, is that the code is does what the community wants. If the community agrees, then it should move smoothly. It doesn't always move smoothly, meaning Ethereum Classic and there'll probably be a Monero Classic. I mean, but then you have two different paths, and you can kind of join or pick which one you want.
Well, it seems then that your philosophy is that hard forking in itself is not that risk, outside of just leaving some people out if they don't want to join.
There are coins out there that have a regular planned hard fork. It's just an upgrade. The community moves along with it, and it's really up to the community, though, and that's really where the protection comes from. Is the miners aren't going to switch over to the software if you put something stupid in the software. I mean, they need to know and should know, what the upgrade is, so that you don't have somebody coming in to the developers and saying, "Hey, we're going to change this, and this has to go out." The miners are there for a reason, to say, "No, this is a bad change," and so if you have a whole bunch of have a bad change, the miners shouldn't switch.
Very good. Well, Bruce, do you share the same philosophy regarding hard forks?
Yeah, I think so. I see what you're saying, is that if you make it a regular practice, it's just more of a chance that somebody could try and make it contentious or sneak something in. But I think the attitude is kind of very cypherpunk manifesto-ish, which is just sort of like, hey, here's code. We're not promising anything other than what the code says, and if somebody likes that kind of vision that we put into what the code is, then great. And if not, then they don't have to come along with anything anybody says, or there isn't any way that developers, we don't have any power. The moment that January 3rd came along, we lost all power over this. We can't affect a fork. We can't say here's the fork. Right now, in these early stages, most people tend to want to follow what Tron is saying, because they wouldn't be involved in the project. Otherwise, you don't get into a project 3 weeks in and say, I hate this project. You wouldn't bother getting in the project in the first place. So I think the first fork will probably be pretty straightforward. But just given the math, I'm sure that there will be a chain, likely a minority chain, that stays with Ravencoin Classic, and that can do whatever they want. And If that becomes a great project, great, but yeah, I think that the attitude is just sort of like you put it out there, you publish it, and people can run it or not run it. It's sort of the ultimate governance mechanism, at least that I know of for a project like this.
I think that now that you're going to add the new features, everybody knew that since the beginning, and that hard fork it's not going to be contentious, and there's not going to be any security issues, and the network is small, etc. I'm sure that as time passes by, the community in general is going to think a lot before there's a new hard fork.
Yeah, and they should think a lot. They should think a lot. They should look at the code, and yeah, they really should. They are the ones that are in control. The miners.
And it should be hard. It should be something that you don't want to have any developer have the ability to just say, "Oh, I'm going to fork this" or something, or because we have to think. Even though this is a tiny little experimental, I use the word experimental, and people mistake that to think that we're not serious about it. We are serious about it. You can be serious about an experiment, but it is an experiment in the sense that we have anybody who says they know something is going to work is probably lying. We don't know it'll work. We hope. We're going to put everything we can into trying to make it work, but even a tiny experimental project like this, we want to plan for the future to be attack proof. We want to plan with the kind of hyper paranoid level of security that Bitcoin has. That's why you have a network, and when you get to that level of network, you have to say, okay, has Tron been compromised by a government? Are they making him do something and making him disguise it in a way that we wouldn't see? You have to do that. You have to think adversarially in crypto. And Bitcoin is probably the best example I know of where it's very adversarial, both on whether it's crypto Twitter or the way that people do their personal security or how they hold their backpacks or how they communicate. Everything in Bitcoin is adversarial, which is good for an early, simple, kind of experimental stage project. You don't have that kind of contention. Nobody would hopefully nobody would be bothered to go and make physical threats against Tron for our little project. They just go and do their own. But if this thing works and it becomes a real serious chain that has billions or trillions of dollars on it, well, then we have to plan now to make these baby steps to say, okay, what kind of our best practices for governance are there? And those would include making sure that there's nobody really has any power, and it's all about the code. Go back to the Cypherpunk manifesto. It's just, here's the code. People can run it or not run it, and hopefully you end up with a vibrant community that does checks and balances on that.
Regarding, you mentioned governance. So regarding governance, voting is also going to be a feature on the network, but voting is only for the security tokens or the tokens, but not at the protocol layer, no?
Right. Yeah, the voting is really so that you can have this token and communicate with people and allow them to give feedback. And the feedback would basically be taking the tokens that you've sent them, and then they can send it back to different addresses that you've designated. You can tell them what that is via a message, because it'll have messaging. And if people want to build websites that make this easier to just click and drag or whatever, click on votes, that'll be possible. The chain will contain the results of the vote and the protocol for the vote, but there's probably an easier way to vote than I want to send this vote token to this address. Probably.
So it's for the tokens, and at the protocol layer is going to be like Bitcoin. It's just adoption, or people running the code is the vote that you support the code.
Correct. Yep.
Add-ons. So we already spoke about the features that are going to be added in the future, and regarding the protocol and side chains. Is RSK going to be compatible with Ravencoin? Does it have SegWit and Lightning Network?
Yeah, it should have SegWit. I don't know if it has the newest changes that were added in the most recent Bitcoin update, but it should be. It should be Bitcoin compatible, so those things should work.
And we do have compatibility with RSK. I'm an investor in RSK, good friends with those folks, and I've talked to them. There isn't any formal way to talk because this isn't a corporate project. So there's no it's somebody just has to contribute that code. I've talked to those guys, see if they know people that are interested. Certainly RSK is a natural fit for this because the goal of it is to at least have one potentially large use case be securities type tokens. The kind of smart contract functionality that RSK allows by making it so you can use Solidity on the Bitcoin chain would be exactly perfect for this. And the great news also is that we don't have to do anything different for the roadmap or any of the work that Tron and the other developers do, because somebody can just build the RSK and make it work just like the RSK built for Bitcoin. So the two-way peg with Ravencoin and RSK is pretty straightforward. So that'd be great if somebody prefers to. Hopefully, if they're going to create a token, they'll find advantages in this. But code is indifferent to it. If they want to create a token on that, it's great. And especially if they want to have a smart contract functionality, some of the functions that we don't have, that would be good. And I think it gets really powerful when you combine the two. You say, okay,
Turing
Ravencoin native assets, and then you have an RSK smart contract that runs on the same blockchain as those that can influence some of these more advanced smart contract type of features, but you're using a native token that's hopefully more secure and easier to use. RSK would be great.
Lightning, did you mention that?
Yeah, Lightning just requires SegWit, so there's people can already do that.
Very good. If I'm a developer or user, where are the resources? Ravencoin.org is the website.
Yep.
Wallet. What items are available for me to start?
Yeah, so the wallet will look. I mean, the client will look a lot like the Bitcoin client. So we have a graphical client for Linux, Mac, and Windows, and then also the daemons and things that are normal daemons and command line tools that the Bitcoin has. So those all exist. You can download those now. We'll likely have fairly soon Android and iOS wallets as well, or SPV wallets. So it's more fun and easy to kind of send Raven or between individuals. Yeah.
The current wallet is Ravencoin QT, and it's a full node. And soon you're going to have SPVs for phones.
Correct.
Very good. Excellent.
And you can get those on the if you go to the Ravencoin.org site and click the official binaries, which brings you to GitHub. This is easy for technical people. It's not too hard for non-technical people, but you go to Ravencoin.org, you click where the GitHub is, that brings you to GitHub, and there's a section called binaries, and then in there it has your operating system. So if you're Windows, you go to the Windows section. I think there's 4 executables that you download. You download all of those, and that'll be the Raven QT wallet. So it's pretty simple, even for a non-techie. Should only take 5 minutes to get your Ravencoin.
And if you're a Mac user, you just download the DMG. It installs it. If you're a Windows user, you just download the QT and it just runs. You don't need all the binaries unless you're kind of want to do command line ish.
So it's easy. It's easy to find everything there on the website. And is there a block explorer?
There is a block explorer. I believe there's 2 now. They're community-driven projects. They've just built them, and we link to them.
And chats like Discord or Telegram. And
there is. There's a Discord. There's a Telegram.
There's 2 Discords. We actually, I don't know if we've updated. There's 2 Discords. Most of these are community driven. Again, we tried to. There's benefits and drawbacks of trying to control things. So we tried to just let the community do it. But yeah, so there's the Discord. We plan on and I'd love to get anybody's advice. Figuring out the best way now that the roadmap and the updated paper are out to figure out the best ways for public dev communication. Tools like Discord and Telegram are great for communicating with a large number of people, but then it's not so great for development communication. So we'll be setting up, or somebody who will be setting up something like that as well.
I think in general, Ravencoin is very interesting because you decided to focus on this. It's like a network with a very important feature and specialize in issuing assets, not tokens.
Yep.
And with the voting, dividends, all those features, I think it's very good. As a stockbroker, Bruce, we value that because it gives the functionality of how the real world has worked for a long time, but also because it creates the incentive, for example, for me as an entrepreneur to create a startup on Ravencoin. I think it's very attractive instead of going through Delaware and creating the corporation and all that, which is very cumbersome. And also for people to issue tokens, the incentive of the potential future value of the tokens is a driver for people to come and work on Ravencoin. So I think that's a very big positive. The only things that I see is this like dichotomy between security, but at the same time modifying the block features and having a philosophy of hard forking. So I would say that in my only personal opinion, Ravecoin has a philosophy of total security like Bitcoin, but it's really a little bit above because it needs to add all of these features and hard fork in the future, and also this anti-ASIC philosophy opens a little bit the space for hard forking in the future again. Of course, Ethereum is much more liberal, and they like to hard fork and make changes, and they openly say that they would make a change if there's a malicious, very obvious malicious user on the network and stuff like that. So it's different. But I would say that Ravencoin is just above Bitcoin in terms of security.
That's good. One important note, the difference with Ethereum, one motivation for this, I think, is that there's securities issuers who want to have a chain that is maybe more immutable than Ethereum. I mean, it was a negative to some people that Ethereum changed for the DAO, but not so much maybe because they're concerned about the DAO or the whatever it was, small amount, 30 million at the time, but the fact that it shows that it can be done sets a dangerous precedent, because there's much more important things that are going to happen. If you're building a serious chain that's serious for the world and serious for global economy, there are much more serious things that are going to happen than some joker, not even hacking. It was really just an unintended use of smart contract, really an exploitation. You're going to have 9/11 scale attacks. You're going to have wars. You're going to have nations at war with each other. You're going to have crazy dictators who become into power. If you look at things on a decade plus type of thing, you're going to have much bigger challenges. So if Ethereum caved for that, then it's certainly possible that a state actor or something else could order them to make a change or revoke somebody's coins. And that's a very, very difficult road that you don't really, at least in my opinion, don't want to go. Some people feel, okay, no problem, do the right thing and change it. But I think then you get back into a centralized database, and I don't want to speak for anybody else on the project, but I don't think most people on the project should have, they certainly shouldn't have the power to even do those kind of changes. But I don't think they even want to be in a position where somebody would order them. Where if somebody sends me a court order saying, "Hey, change this guy's balance," I have no power, and we want to create a system where Tron has no power. Nobody has any power to. And
I won't. It's really the distributed miners that would be able to look at the code and say, "Wait a minute, this is rolling stuff back. We're not accepting this." So I don't have the power either. All I can do is change the code and say, hey, here's the changes. This is why we did them, with the hope that if they're the great changes that we've already predicted, we've already written down and said we're doing, that they'll accept them. But there's no guarantees. I mean, that's something we really don't have absolute control over. So.
Recently I wrote what I call the 10 principles for blockchain governance, which are just a guide of principles that I observed from the blockchain space in the last 6 years. And one of the things that I wrote was least authority, and that is for the community only to implement modifications and future changes with only the technical rationale in mind, but not social issues and stuff like that, and to leave all the social issues like crime and bad actors, etc., to the traditional world, not to the legal system.
Yeah, we touched on that a little bit in the white paper. In a global economy, this isn't new age cypherpunk hippie philosophy. This is real, I think, serious business. I don't think that it works in a global economy if you have a captive list where you have a central party or semi-centralized party who can decide who gets blocked, and this guy's a hacker, and this guy's a terrorist, and this guy's on the OFAC list, so we're going to block this and this and this. I don't believe personally that can work in a global economy, because Israel and Saudi Arabia and Taiwan and China and the Dalai Lama are not going to agree on who gets banned. So then what happens? We say, oh, well, we go to OFAC, or we go to the UN, or we go to some centralized body and say, okay, the rich white nations get to decide who gets banned and who's a terrorist and who's not a terrorist. I don't think that'll work in a global economy, because you're going to have, even something as simple as China and the United States, especially right now with this looming trade war, they may not agree on who the next Bernie Madoff is and whether you should seize his tokens or not. So it just becomes a big mess where as soon as you have anybody who has that kind of power, it will inevitably be co-opted by OFAC, the World Bank, whoever, some kind of huge centralized power that gets to say, yes, these people are terrorists. Block these addresses. Mm-hmm. Don't block those addresses. Mm-hmm. Once you do that, I think it's not really real crypto anymore, and it breaks. So it's not a philosophy thing. Although I think everybody involved in this project has a very kind of freedom-focused cypherpunk sort of personal philosophy. That's not really the only reason to do it. From a pure business standpoint, the most business-like person who doesn't care at all about cypherpunk values, who doesn't care at all about freedom, should be able to objectively look at this and say, you know what, this is good business. Because as soon as you give China the power to ban, or OFAC the power to ban, or the World Bank, or the United States, or the UN, or some centralized organization, everything doesn't work. And some country or countries, typically basically all of Africa, are going to get left out of the, they're going to left out in the cold like they always have been. Mm-hmm. So for it to work in a true global economy, this isn't the days where people just keep their money in their own town bank anymore. You need to have money be able to move from Nigeria to China to Kansas. Mm-hmm. And so I think it has to be open. And that's just a burden for the regulators in each individual jurisdiction. If the United States wants to have all kinds of onerous laws preventing it, that's their mm-hmm. business. They're going to have to do that. But I don't think it'll work if somebody tries to do it on a protocol level.
And I would say that for Ravencoin, maybe minimizing in the future of the frequency of forks would help in closing that potential loophole. Well, guys, thank you very much for your time. Thank you, Bruce. Thank you, Tron. I don't know, Tron, if you have any final comments.
No, I think you've covered it all. It's been great.
Yeah. Thank you very much for your time, guys.
Thank you.
Bye-bye.